What if I told you the nuclear trade may not just be a retail hype story anymore? What if the real signal is not only in the stock chart, the social media trend, or the latest headline about small modular reactors? What if the more important clue is buried inside 13F filings, where large institutions show where they were positioned at the end of the last reported quarter? That does not mean institutions are buying today. It does not mean smart money is right. And it definitely does not mean retail investors should blindly copy any fund. But if AI data centers, power demand, nuclear restarts, uranium supply, and grid bottlenecks keep becoming bigger market themes, then every retail investor should know which nuclear names are showing up on the institutional watch list. If you want to track where big money may have been positioned before retail fully understands the next market rotation, subscribe to Stock Breakout. Hit the like button and drop the nuclear ticker you're watching most closely this 13F season. Because this is not a blind buy video. This is a positioning map. Most retail investors look at nuclear stocks through price action. They see a ticker rip higher, they see a headline about AI power demand, or they see an SMR stock trending online. But professional investors may be looking at the same trade through a very different lens. They are watching electricity demand. They are watching 24/7 power. They are watching nuclear restarts. They are watching uranium supply. They are watching fuel enrichment. They are watching grid constraints. And they are watching which companies have real assets, real contracts, real infrastructure, and real strategic value if the AI power trade becomes one of the biggest market themes of the decade. The first AI trade was chips. The second AI trade may be power. And nuclear sits right in the middle of that conversation. But before we break down the watch list, we need to be very clear about what 13F data can and cannot tell us. A 13F filing is a delayed quarterly disclosure. It usually shows where certain large institutional investment managers were positioned at the end of the quarter. It can include information like the issuer name, the security class, the share count, and the quarter-end fair market value. That can be useful. It can show which stocks institutions held. It can show whether new positions appeared. It can show whether existing positions increased. It can help retail investors see which nuclear, uranium, fuel, power, and infrastructure names are becoming institutional enough to monitor. But 13F data is not a crystal ball. It is delayed. It is not a live trading signal. It does not show what the fund is doing today. It may not show the full strategy. It may not fully reveal hedges, shorts, derivatives, or why a position was held. A fund could own a stock as part of a basket. It could own it against another position. It could have already sold it after quarter end. And passive ownership is not the same thing as active conviction. If Vanguard, BlackRock, or State Street owns a stock, that does not automatically mean a hedge fund has discovered a secret winner. Some large ownership simply comes from index funds, ETFs, and passive flows. The more interesting signals are usually active managers, new positions, large increases, repeat accumulation, concentrated exposure, and unexpected institutional interest in smaller names. So use 13F data properly. It is not a buy signal. It is a map. It shows where large institutions were willing to have exposure at the end of the quarter. Now here is why nuclear has become a 13F watchlist theme. AI is changing the electricity conversation. Data centers need massive amounts of power. They also need reliability. The market has already priced in many obvious AI winners, especially in chips and cloud infrastructure. But now investors are asking the next question. Where does the power come from? That is why nuclear has returned to the center of the market conversation. Nuclear power can provide reliable baseload electricity. Uranium supply matters. Nuclear fuel matters. Enrichment matters. Grid infrastructure matters. Reactor components matter. And not all nuclear stocks are the same. That is the key point. The question is not just, which nuclear stock is going up today? The better question is, which type of nuclear exposure are institutions willing to own? I would break this watch list into 4 buckets. The first bucket is power asset winners. That means Constellation Energy, ticker CG, and Vistra, ticker VST. The second bucket is uranium and the fuel cycle. That means Cameco, ticker CCJ, and Centrus Energy, ticker LEU. The third bucket is nuclear infrastructure and reactor components. That means BWX Technologies, ticker BWXT. And the fourth bucket is high volatility SMR moonshots. That means NuScale Power, ticker SMR, Oklo, ticker OKLO, and Nano Nuclear Energy, ticker NNE. Institutions may treat these buckets very differently. CG and VST may appeal to investors looking for real power assets, electricity demand exposure, cash flow, and AI data center power themes. CCJ and LEU may appeal to investors focused on uranium, enrichment, nuclear fuel, and energy security. BWXT may appeal to investors looking for picks and shovels exposure to nuclear components, engineering, and government-related nuclear demand. SMR, Oklo, and NNE may appeal to investors looking for speculative upside, but these names can be much more volatile, execution-sensitive, and narrative-driven. So let's go through the watch list. First, Constellation Energy, ticker CEG. CEG is one of the cleanest public market ways to watch nuclear power assets. The company owns a major nuclear generation fleet, which makes it very different from early-stage nuclear concept stocks. That is why institutions may pay attention. CEG is tied to existing power generation. It is tied to electricity demand. It is tied to the idea that AI data centers may need reliable long-term power contracts. And it is tied to the broader nuclear restart and baseload power narrative. CEG may be less exciting than a nuclear moonshot, but that is exactly why institutions may care. It already has real assets. The risk is that expectations can get high. Valuation matters. Power prices matter. Regulation matters. If the market already prices in a major AI power boom, the stock can still disappoint. But from a 13F watchlist perspective, CEG belongs near the top because it connects nuclear power, AI electricity demand, and institutional quality assets. Next is Vistra, ticker VST. VST is not just a nuclear stock. It is a power demand stock. That may be why it belongs on the AI power watch list. Vistra has become important because the market is repricing independent power producers. If data centers need more electricity, then companies with generation assets can become more valuable. Investors may not be looking at VST only through a nuclear lens. They may be looking at it through power scarcity, electricity pricing, grid demand, and AI infrastructure. That is a powerful setup, but the risks are real. VST can be sensitive to commodity power prices. Debt matters. Regulation matters. And after a strong market repricing, the stock may already reflect a lot of optimism. So for retail investors, VST is not a simple nuclear trade. It is a broader power generation trade, and that may make it even more institutionally relevant. Now let's talk about Cameco, ticker CCJ. CCJ is one of the first names many institutions may study when they want uranium exposure without going all the way into tiny speculative miners. Cameco is a uranium and nuclear fuel cycle leader. If the market believes nuclear power demand is growing, uranium supply becomes a major part of the story. Nuclear plants need fuel. Supply security matters. Long-term contracts matter. Global nuclear restarts matter. That is why CCJ has a different role from CEG or VST. CEG and VST are power demand names. CCJ is a uranium supply name. The risk is that uranium is still a commodity-linked trade. Prices can be volatile. Mining risk is real. Valuation can swing with sentiment. And commodity cycles can punish investors who chase too late. But as a 13F watchlist name, CCJ is one of the clearest uranium exposure names for institutional investors. Next is BWX Technologies, ticker BWXT. BWXT may not have the same retail hype as the moonshot names, but it may be closer to the kind of nuclear infrastructure company institutions can actually underwrite. The company is tied to nuclear components, specialized engineering, and nuclear-related industrial work. This is the picks and shovels angle. Instead of betting only on a future reactor concept, BWXT gives investors exposure to the infrastructure side of nuclear. Reactor components, specialized manufacturing, government and defense-related nuclear work, industrial quality. That can matter because institutions often prefer companies with real businesses, real contracts, and clearer underwriting paths. The risk is that BWXT may not move like a speculative SMR stock. Upside may be slower. Contract timing matters. Government budget exposure matters. Valuation still matters. But in a serious nuclear watch list, BWXT deserves attention because it is not pure hype. It is infrastructure. Now let's talk about Centrus Energy, ticker LEU. LEU is not just a nuclear hype ticker. It is tied to one of the most sensitive parts of the nuclear supply chain, fuel. Centrus is connected to nuclear fuel and enrichment. That makes it a very different kind of watchlist name. If nuclear energy security becomes more important, then fuel supply, enrichment capacity, and supply chain bottlenecks become more important too. This is why LEU can attract institutional attention. But but also carries major risk. Policy matters. Contract timing matters. Customer concentration can matter. The business can be complex. The stock can be volatile. And retail investors need to understand that fuel cycle exposure is not the same as owning a simple power utility. LEU belongs on the watch list because the fuel angle is strategically important, but it does not belong in the blind buy category. Now we get into the more speculative bucket. NuScale Power, ticker SMR. SMR may be one of the easiest nuclear stories for retail to understand, but easy to understand does not mean easy to execute. The ticker is clean. The story is direct. Small modular reactors are easy to explain. The upside imagination is obvious. If SMRs become a major part of the future energy mix, investors can see why a pure play name might get attention. But institutions may be more cautious. Commercialization takes time. Project economics matter. Regulatory complexity is real. Funding needs can be real. Timelines can shift. And the stock can be extremely volatile. That does not mean SMR should be ignored. It means retail investors should track the difference between story momentum and institutional conviction. Next is Oklo, ticker OKLO. OKLO may have one of the most exciting stories in nuclear, but the 13F question is whether institutions are treating it as a real long-term position or just a speculative watch list name. Oklo sits inside the advanced nuclear conversation. The company has a next-generation reactor narrative, AI power relevance, and high-profile market attention. For investors looking far into the future, the optionality is obvious. But this is still an early-stage story. Execution risk is high. Regulatory timelines matter. Business model maturity matters. Valuation risk matters. Retail-driven volatility can become extreme. OKLO may be worth watching closely after every 13F season because the institutional signal could tell investors whether the name is moving beyond hype. But the story is powerful and the risk is real. Now the most speculative name on this list, Nano Nuclear Energy, ticker NNE. NNE may have powerful story value, but investors need to separate story value from institutional conviction. Nano Nuclear sits inside the microreactor and advanced nuclear narrative. It can attract retail interest because it is small, volatile, and connected to a huge theme. The market loves big stories, especially when they combine nuclear innovation, energy security, and AI power demand. But this is also where risk can be highest. Speculation matters. Execution uncertainty matters. Limited maturity matters. Valuation swings can be violent, and there can be a major disconnect between story value and fundamental value. So NNE belongs on the 13F watch list, but only with caution. If institutions start showing meaningful active interest, that would be worth studying. But without that, retail investors should avoid confusing a big narrative with proven institutional conviction. Now let's talk about one of the biggest mistakes investors make with 13F filings. They confuse ownership with conviction. The key is not just whether institutions own the stock. The key is whether active capital appears to be moving before retail fully understands the setup. A large passive holder does not automatically make a stock a smart money favorite. Index funds may own the stock because it is in an index. ETFs may own it because it fits a theme. That is not the same as a concentrated active manager making a deliberate nuclear bet. So when you look at 13F season, ask better questions. Are active managers entering? Are positions increasing? Are smaller names getting unexpected institutional attention? Are funds rotating from speculative nuclear names into power assets? Are they choosing uranium, fuel, infrastructure, or pure SMR upside? That is where the signal may be. Now here is my 13F nuclear watch list ranking. This is not my buy ranking. This is my 13F watch list ranking based on institutional relevance, nuclear exposure, business quality, risk level, and connection to the AI power trade. Number 8 is NNE. It has a powerful story, but it is the most speculative name on this list. It needs careful monitoring, not blind chasing. Number 7 is OKLO. The advanced nuclear narrative is strong, and the AI power angle is clear. But the business is still early stage and execution sensitive. Number 6 is SMR. NuScale has the cleanest SMR identity and a strong retail narrative. But commercialization risk, funding needs, and volatility keep it in a high-risk bucket. Number 5 is LEU. Centrus has an important fuel cycle angle, and enrichment is strategically important. But policy, contracts, and complexity make this a higher-risk institutional watchlist name. Number 4 is BWXT. BWXT is a serious nuclear infrastructure and components name. It may not have the biggest retail hype, but it has institutional quality characteristics. Number 3 is CCJ. Cameco is one of the most obvious uranium exposure names. If institutions want nuclear fuel exposure at scale, CCJ is likely to stay on the radar. Number 2 is VST. Vistra is a major AI power demand and power generation watchlist name. It is not pure nuclear, but that may be exactly why institutions care. And number 1 is CEG. Constellation Energy is the cleanest nuclear power asset watchlist name because of its existing nuclear fleet, power market exposure, and direct connection to the AI electricity demand story. Again, this is not a promise of upside. It is a monitoring framework. Before we close, let's talk risk. 13F data is delayed. Institutions may have already changed their positions. A fund may hold a stock for reasons retail investors cannot see. Nuclear stocks can be volatile. SMR names can be highly speculative. Uranium and fuel cycle names can move with commodity and policy risk. Power stocks can be sensitive to regulation and electricity prices. A watch list is not by signal. Position sizing matters. Retail investors should do their own research. Nothing in this video is financial advice. I am not your financial advisor. This is market commentary and research for education. The big takeaway is simple. The nuclear trade is not just about which ticker is trending on social media. The real question is whether institutional money is building exposure to the AI power trade through nuclear assets, uranium, fuel, and infrastructure names. Retail watches the headlines. Serious investors watch the positioning. So after the next 13F season, do not just ask which nuclear stock moved the most. Ask which names institutions were willing to hold at quarter end. Ask whether the money is going into power assets like CEG and VST, uranium exposure like CCJ, infrastructure like BWXT, fuel cycle names like LEU, or speculative SMR stories like SMR, Oklo, and NNE. That is how you turn 13F filings into a watch list tool instead of a hype machine. If you want more institutional positioning breakdowns like this, subscribe to Stock Breakout. Hit the like button and comment which nuclear ticker you will be checking after the next 13F season. CEG, VST, CCJ, BWXT, LEU, SMR, Oklo, or NNE.